How do Singaporeans plan to retire?
Live and travel on my own personal yacht.
I hope to participate in charity bakes.
Taking photos of nature.
What are some factors to consider when planning for retirement?
We always advocate anchoring the 3 pillars for retirement. So what are these 3 pillars? A fully paid up home, appropriate and adequate insurance coverage, and adequate retirement savings. Once that plan is in place, we can then ask ourselves, how many years do we have to retirement? Because then that will be the runway for us to accumulate the necessary financial resources to live our retirement dreams.
For Singaporeans, the Central Provident Fund, or CPF, is the foundation of our retirement. On reaching the age of 55, the ordinary account and special account savings up to the full retirement sum are transferred to the retirement account, which provides monthly payouts during retirement.
There are ways to maximize your CPF savings beyond just working contributions. And one of that is through making cash top-ups or CPF transfers to your special account or your retirement account. The earlier we make top-ups, the longer runway we have to accumulate and benefit from the compounding interest.
From age 65, Singaporeans can look forward to receiving lifelong monthly payouts from CPF Lifelong Income for the Elderly or CPF Life. This National Longevity Insurance Annuities scheme enables Singaporeans to lead a worry-free retirement by providing lifelong monthly payouts. There are several housing monetization options that let seniors unlock the value of their HDB flat to supplement their retirement income.
For seniors who are looking at selling their current home and buying a 3-room or smaller HDB flat, they could enjoy the Silver Housing Bonus, or SHB in short. The SHB offers a cash bonus of up to $30,000 when seniors use part of their proceeds to top up their CPF retirement account and join CPF Life if eligible. Another option is to join the lease buyback scheme. This lets seniors unlock the value of their tail-end lease and receive monthly payouts for life through CPF Life while they continue to stay in the same flat. They will also receive cash bonus of up to $30,000 depending on the flat type and top-up amount to their CPF retirement account.
Investing is a good way to grow one's retirement income. But one will first need to get the fundamentals right.
Before a person starts his investment journey towards retirement, one must first make sure that he has that ability to take risks. The key risk is volatility risk. That is the risk of the markets going up and down, and how do you manage that kind of risk? Well, firstly, you can diversify across asset classes, such as equities and bonds. Secondly, diversify across many securities. ETFs are good because it's low cost. It buys into hundreds of securities. And thirdly, invest in a regular manner. And what that means is dollar cost averaging, right? So instead of putting one lump sum in, you can actually put it over many months.
Besides having a good investment strategy, one needs to be aware of investment scams.
Now, scams are one of the financial pitfalls that comes like a robber in the night to rob us of our hard-earned retirement savings. To safeguard against scam, ask, check and confirm. If an investment opportunity is being presented to you, do ask as many questions as you need to ascertain the legitimacy of that product. How about check and confirm? We have a financial institutions directory and an investor alert list. These are various portals that one can check to ascertain whether the investment company is authorized and regulated by the Monetary Authority of Singapore. Just because an investment company is regulated by Monetary Authority of Singapore, it doesn't mean that the product is risk-free. So a person will still have to apply his or her investment principles to decide for himself or herself whether or not to enter into this investment. If you would like to know what are the current scams, the modus operandi, or any anti-scam resources, you may go to scamalert.sg to find out more.
To provide basic healthcare protection for all Singaporeans, the government introduced several national insurance schemes.
So as we age, insurance becomes quite important in two areas. The first is in the area of medical care, And for that, we launched MediShield Life in 2015. MediShield Life provides universal and lifelong coverage for large medical bills such as hospitalization for all Singaporeans and permanent residents, regardless of their age or their health condition. For long-term care, we launched ElderShield in 2002. We replaced ElderShield in October 2020 with CareShield Life. So CareShield Life is better than ElderShield because it gave lifetime coverage for as long as one was severely disabled, and it also gave larger payouts on a monthly basis. CareShield Life and MediShield Life premiums can be fully paid for using your MediSave accounts.
Learn more about financial planning for retirement through resources provided by MoneySense, Singapore's national financial education program. Visit the MoneySense website or follow MoneySense on Facebook and Instagram and use My MoneySense, a government digital financial planning service, to get started on financial planning. If you prefer learning face-to-face, you can also attend free public workshops conducted by the Institute for Financial Literacy, MoneySense's outreach arm.